Welcome to Xintian Wall Street Moment at the New York Stock Exchange with our guest, Chief Market Economist, Mr. Peter Carrillo. It's great to have you with us.
Good to be back.
Yeah, right at the current situation, especially we have seen the market momentum after the announcement of Mr. Trump walk away from the Iran nuclear deal. We really want to know about your insights, thoughts about the market in recent sessions, especially for the oil market and the good prices. And we notice that the oil prices now is holding steady above $70 per barrel for recent trading sessions, rallying more than 5% in past months. So do you think this time rise in oil ignited like a new bull run?
Well, absolutely. We're in a bull run, and obviously, the market today actually closed up about 20-30 cents here in New York, making a new yearly high. And of course, the fundamentals continue to improve. And now with the United States pulling away from the Iran nuclear deal, there's a good possibility that we could see oil later in the later part of the year spike up to 100. Now, why am I saying that? Well, if you notice, as I said before...
Yeah, you were right last year about the oil rally. But now,
thank you.
Yeah.
The fundamentals continue to improve. The market is now balanced. And so unless the global economy or the U.S. economy weakens, which I don't think there's any imminent danger of that, then, the chances of oil dropping is far less than the possibility of oil trading between $75 and $80. And as I said, the key now hinges on whether the U.S. and Iran can ratify a new deal going forward. I suspect that that's what's going to happen, but the longer that takes, then the greater the possibility of oil prices touching $100.
Do you think right now in the market now, the momentum buying sustains the rally actually?
No, I think equities are stuck now probably in a little bit of a lower trading range. Mm-hmm. And the reason for that is because, interest rates are going higher. In fact, if you look at the yield curve today and you look at what happened in yields, the 10-year finally managed to get over that 302 area. Last time I checked, it was at 307. That probably means that we're going to see yields settle somewhere between 310 and 3.25.
You are very positive that in the half of this year, we're going to see WTI and Brent going to reach like $100 per barrel. But we are now very focused on the 90 and 180 days, the period of the walk away from the Iran nuclear deal.
Well, there's another caveat to this, and that is...
Do you think at that time period we're going to stay above $80 plus? 80?
I think we could spike up to $80, but average around 75 over the next quarter. But there's another caveat to the oil story, and that is Venezuela. There isn't much press about that. But if you look at what's happening, the production out of Venezuela continues to dry up. It's dropping. Yeah. And so that simply, is another reason to believe that the longer it takes for the U.S. and Iran to work out a new deal, the greater the possibility of oil spiking up to 100. That doesn't mean it's going to stay at 100. I mean, we could just see a flurry, within the market, running up to that, and then eventually coming back down and settling somewhere between 70, 75, maybe $80.
Yeah. And also we know that rising geopolitical tensions are generally favorable, they're attracting the safety trade. Do you
Absolutely.
think?
Of course, we didn't see that with the price of gold today.
Yeah.
We saw the opposite, again, due to the strong dollar and to...
Do you think the dollar is ripe for pullback?
Well, I think fundamentally the dollar is now overbought, but we see a lot of strength in it, and that in part is due to the hawkish Fed that we have. If you looked at, if you looked at most of the speeches that the Fed members have been
Understood.
portraying,
Yeah.
they are all somewhat hawkish. And I think that's, besides the good economic news, that's the key behind the rise in yields.
And also the downside momentum in gold prices just picked up a little bit after the gold prices broke out the support at $13 at the 200 average day. So what's the prediction on the gold in the short-term prices?
Well, in the short term, I think we're looking at yields at the 10-year anyway, somewhere between 3.10 and 3.25,
And
which I think will be a problem for the stock market.
for the stock market
Yeah.
in the States.
A short-term problem.
Short-term and for the good price, do you think is in the near term they will break out the $13
Gold, you know, we broke that psychological barrier of 1,300. Probably going to test the very low end of the trading range, possibly 1275, but we should hold around that area.
Also, one last but not least questions about what have you seen and your inside thoughts about the recent market in general now, and you want to share with us the
Well,
interesting points.
Yeah, well, obviously we have new leadership in the market, in the stock market, and that new leadership is responding to the price of oil. And so, you know,
It is tons of things here.
yeah, so, you know, it's going to be hard, I think, to see any real momentum getting back in the stock market. Look, I've been on Wall Street for many years, and I have never remembered a period where you have rising interest rates and a good stock market. Doesn't mean that the stock market collapses, because we're going up for the right reasons. That is, an economy that's strengthening, and we don't have an imminent threat of inflation. But it's always been a bumpy ride. I don't ever recall a period where you had interest rates rising and the stock market rising. Doesn't work that way.
Yeah, that's real estate. And thank you so much for your time and joining us today. And thank
My
you
pleasure.
so much for your inside thoughts with us.
Thank you.
Thank you. Thank you for watching us, our viewers.